This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil market participants have switched to dreading a shortage in fuel from focusing on impending oversupply in just 2 days this week. After Israel attacked Iran and Tehran pledged to retaliate, oil prices jumped as much as 13% to their highest since January as investors price in an increased probability of a major disruption in Middle East oil supplies. Part of the reason for the rapid spike is that spare capacity among OPEC and allies to pump more oil to offset any disruption is roughly equivalent to Iran's output, according to analysts and OPEC watchers.
Marine fuel sales in Singapore recovered to hit 16-month highs in May, official data showed on Monday. Volumes at the world's largest bunker hub for ships totaled 4.88 million metric tons, up 10.8% month-on-month and 1.1% higher year-on-year, according to data from the Maritime and Port Authority of Singapore. The UPTICK emerged as more vessels arrived in Singapore for container movements and bunkering. Container throughput is at the highest in the year to date, likely due to front-loading shipments after the tariff pause on May 12, said Ivan Matthews, head of APAC analysis at shipping analytics firm Vortexa.
Moving on to the top news in the energy sector.
Oil prices were volatile on Monday, after surging 7% on Friday, as renewed strikes by Israel and Iran over the weekend increased concerns that the conflict could widen across the Middle East and significantly disrupt oil exports from the region. Brent crude futures were up 33 cents, or 0.4%, to $74.56 a barrel by 0732 GMT, while U.S. West Texas Intermediate crude futures gained 38 cents or 0.5%, to $73.36. They had surged more than $4 a barrel earlier in the session and also fell into negative territory briefly. Both benchmarks settled 7% higher on Friday, having jumped more than 13% during the session to their highest levels since January.
Solar manufacturing company heads in China, grappling with losses and tariffs on exports to the U.S., called for an end to a price war and a solution to overcapacity in the sector, but industry participants predict a slow turnaround. China's solar manufacturers have reported losses this year as U.S. President Donald Trump's trade war put further pressure on demand within the industry. Losses in the photovoltaic manufacturing value chain reached $40 billion last year, while for the industry as a whole, including firms' other business lines, totaled $60 billion. Trina Solar Chairman Gao Jifan said. Next, we have the top news in metal markets. China's crude steel output slipped sharply in May compared to the prior year, surprising analysts and keeping steelmakers on track for lower production this year in line with Beijing's push to cut output in the sector. Beijing unveiled plans in March to restructure the giant steel sector via output cuts this year, leaving key details including the time and scale of output curb unanswered. May output slid 6.9% from a year earlier to 86.55 million metric tons, taking the year-to-date total to 431.63 million tons of crude steel, down 1.7% from a year earlier, data from the National Bureau of Statistics showed on Monday.
Copper prices on the Shanghai Futures Exchange and the London Metal Exchange inched up on Monday, supported by better-than-expected Chinese retail data, although the escalating Israel-Iran conflict capped gains. The SHFE most traded copper contract was up 0.2% at 78,550 yuan, $10,938.89 per metric ton as of 0703 GMT, rebounding from a decline earlier in the session, while the LME 3-month copper gained 0.3% to $9,676.50. Copper seems to have performed more strongly as investors, after initial hesitation, reacted with some optimism to China's mixed data, a Beijing-based metals analyst with a futures company said.
We will now look at the top news in the agricultural sector.
Chicago Soyoil futures surged to their highest level in nearly 18 months, buoyed by higher-than-expected biofuel blending proposals and a rally in crude oil prices amid escalating conflict between Israel and Iran. The most active Soyoil contract on the Chicago Board of Trade jumped 4.58% at 52.93 cents per pound, as of 0134 GMT, its highest since December 20, 2023. Soyoil, a key feedstock for biodiesel fuel, gained support after the U.S. Environmental Protection Agency proposed last Friday to increase the amount of biofuels that oil refiners must blend into the nation's fuel mix over the next 2 years. The proposal exceeded trade expectations.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.